Welcome to KNN. KNN is brought to you by Bob Knakal, Chairman of New York Investment Sales at JLL.
Hi, I'm Jon Hageman, Managing Director at JLL. Welcome to KNN. Today I'm here with Bob Knakal, Chairman of New York Investment Sales at JLL. And today we're going to talk about where we are in the current real estate market cycle. Bob, now that we have 3 quarters behind us, tell the viewers where we are in the current cycle of the market.
Hags, I'm very optimistic about where we are in the market cycle. And as you know, what I like to do is give a little historical perspective. And if we look at recent past, I think if we look at this current market cycle, it's very clear that 2014 and 2015 were the peak of activity. In 2014, there was about 5,500 buildings sell. That was an all-time record by more than 10%. In 2015, there was about 80 billion in sales volume, also an all-time record. Since those 2 years, both of those metrics have been sliding to the point where last year there was about 3,600 properties sold in New York City, down from the 5,500 peak. The dollar volume of sales was about 36 billion, down from the 80 billion, so it was less than half of what it was at the peak of the market. And a lot of people feel that we're late in the cycle, but I think we're late in a different cycle than people are referring to.
What do you mean by that, Bob?
Well, I think that we had the upcycle that basically started in 2010 when value bottomed out. Since then, value had been rising. But I think that market cycle ended in the fourth quarter of 2015. And I think that since the fourth quarter of 2015, we've been in a correcting market. We've had the 4 years of a decline in the number of properties sold. We've had 3 years of a decline in the dollar volume of sales, and values have started to come down. 4-year decline in number of buildings sold and 3-year decline in dollar volume are telling, because as we have gone through these cycles in the past, the average length of time that the decrease in volume has occurred has been about 4 years. So we're at about the point where we expect the market to turn, and coming into this year we said that we thought it would be a transitional year for the market and that volumes would shift and that values would start to tighten. After the S&L crisis in the early 90s, value was down by 58%. After the Great Recession from 2007 to 2010, value had dropped 38%. So I think that this correction in the market is much more indicative of what we saw in the early 2000s during that the dot-com bubble bursting, that recession, where we had the volume of sales drop 4 years in a row, but values never dropped in 1 year through that recession. So I think this has played out a little bit more like that correction did.
Bob, you mentioned you think we may be coming out of that correction. Where do you think we are in that process?
Well, if we look at what's happened so far in 2018, Hags, we see that the dollar volume is trending upward as we had expected. We were at about 36 billion last year. As we sit here today, we're trending towards about 45 billion in sales volume, so a pretty nice increase. The number of properties sold has not started to trend upward. That's not all that surprising, because generally when volume metrics turn, the dollar volume will always lead the number of properties sold. So all indications are that fundamentals are tightening, and that will create some stabilization in value, and then value should rise as we get this shift in volume.
So overall, Bob, it sounds like you're pretty optimistic about where we are in the cycle.
No, I'm very optimistic, Hags. I think that if we take interest rate movements aside for the time being, everything that's happening in the market is very positive. And I would say, with the exception of interest rates, that things will progress on a growth trend, not significant or booming growth, but a positive growth projection. And the one caveat is what happens with interest rates and how they're moving. And I know we're going to be addressing interest rates in one of our upcoming episodes, but right now I am very optimistic about where the market's headed.